Hey folks, Dan Frio here, the rate update. Today is September 28th, 2021. Today we're going to talk about deception, how a lot of you guys are getting deceived in regards to mortgage rates and costs and everything else. So that's what we're covering today, so don't go away. You might be sorry. Okay, so I bet you saw this commercial before and felt all warm and cuddly. Take it away.
At Loan Depot, we know home means everything. As America's lender and the official mortgage provider of Major League Baseball, we fund more than 30,000 home loans each month, saving you money and providing mortgage solutions that are personalized, convenient, and fast, and tailored to the most important home team of all, yours. Give us a call at 844-751-LOAN or visit us online today. Loan Depot, home purchase, home refinance, and the official mortgage provider of Major League Baseball.
Man, I watched that video and I just want to click and apply for a mortgage myself. Sarcasm. But what I want to address today is all the misinformation. I'm not going to say fraud, but I'll say misinformation or the shell game behind all the mortgage numbers. Okay. So what prompted this was a YouTube subscriber, and I greatly appreciate all the comments. And they put comments down below. I think it was yesterday's video. You're more than welcome to go back there and check that out. And thanks for the post. I appreciate it. But what came about was somebody debunking or saying, Dan, here's the rates you're telling me, but I got a much better rate. And then in the comments, it basically said, I got this rate and they charged me a half a point or 0.5% of my loan amount as a penalty because my house was a manufactured home. Okay, so it's really not a penalty. It's what we internally called a loan level price adjustment. Okay, other pieces of that equation are you have a low credit score. So you might have a 740 credit score and your rate is lower than if you had a 680 credit score. Why? Well, because you're getting penalized for that lower score, and that's normally built into the rate. But it was a great spin technique by the loan officer that was working with this previous client and said, that's a penalty you have to pay because you have a manufactured home. And we're going to charge you a half a point. Guys, that's still cost to you. So what I want to debunk here is a lot of this is a shell game. And I hate playing that game because I always come back to you guys and give you the truth, the facts. I'll even show you my rate sheets. I got nothing to hide. And how a lot of companies, they'll bait and switch you. And the comment that that subscriber made was, my rate was going to be 2.675 or 2.625. I ended up at 2.75 because my loan officer couldn't lock me in on time. And then, I only paid a half a point fee because I had a manufactured home, and that was my penalty for having a manufactured home. And then there was other costs involved and so forth. So guys, it's all big spin technique. So let me go over some of the headlines right now with some things. And some of these are really concerning. And that's why I figured I would address that through a video with you guys today. So let's get on to where we're at. Today's news: Loan Depot lawsuit alleges wide-scale fraud. Okay, so that's one headline. The next headline: Wells Fargo to pay 36 or 37 million to settle U.S. claims it fraudulently overcharged clients. Okay, that's another claim. And then watch this. Here's I always try to research all of where rates are today, or for you guys, so I can post this all over and I can be transparent and fair and give you factual data. Okay, so what I want to show you here is today's mortgage rates trend, September 28th, 2021. Rates hold. Okay, they're doing the best they can in Investopedia or whatever that is, giving you or issuing these rates. But what I want to show you here is they issued 30-year fixed rate because that's the most standard loan out there. And then where rates are. Okay, so you can see down here, the 30-year fixed rate for a purchase is 3.18, a refinance 3.28. Again, the difference there is to refinance, rates are normally a little bit higher than if you're buying a house. Why? It's that darn penalty that they talk about, your mortgage advisor might talk about. Well, no, it's not a penalty. It's basically a loan level price adjustment, okay? Okay, so let me just give you a behind the scenes look I'm pulling the curtains back on our rates and how rates get factored. All right. So I always tell you guys, hey, what's your credit score? All these things. Why do I ask? Right here. These are what we call loan level price adjustments. These don't get added to your rate. These are what it would cost you in points or a percentage of the loan amount to do this. So what we can do though is if you don't want to pay points and other things like that, we actually up your rate to compensate for these adjustments. Okay, so I hope that makes sense. So for example, if your going rate is 3% and you're looking up here and your credit score is down at the bottom at 620 right here, that doesn't mean now your rate's 3.5%. It means it would be 3% and we would have to charge you a half a point, okay, which would be 0.5% of the loan amount. Or we can adjust your rate to compensate for no points. Okay, and you can see it goes all the way. So if you have a 620 credit score, it depends on your loan to value right up through here. If you move across, you can see that adjustment could go all the way up to 3.75 in points. Well, if you break that down into your mortgage rate, that means your rate could potentially be about 1.5 or 2% higher than the normal rate that would have no adjustments. Okay, so what I want you to focus in on is that client this morning that said they had to pay a 0.5% penalty or a 0.5 point penalty because they had a manufactured home. Absolutely, it's right down in here and that's validated. Okay, however, if you called me up and you said, well, Dan, I have an investment property, I'm probably going to quote you a rate, that's higher than the national average because it's a rental property. All right, and that adjustment is factored in here. Look, you can go, that adjustment could be all the way up to 4.125 in points. All right, so it's hard for me to put these points actually how much adjustment it would be to your rate, but it's a factor in here. So what we don't do is come back and say, oh, you have an investment property, well, your rate's 3%, but we're going to charge you 4.125 in points. No, we might go back to you and say, you know what, the rate is 4% and there's no points. Or yes, you could pay 3% and pay 4 points, but if it's a $300,000 loan, you're talking $12,000 in points. I wouldn't advise it, but you can do that. And there's even more. So that's the tough thing. These are just based on your credit score. These are the adjustments, what kind of property it is a manufactured second home investment property or so forth. Then you scroll down and there's even more. Okay. If it's a purchase, cash out, all these other things. So I want you just to be aware that, mortgage rates don't necessarily have to come, or mortgages don't have to come with points, because when we go back to this screen, you can see down here, these national averages are based on an 80% loan to value right down in here with a 700 to 760 credit score. Okay. And again, if you go back to your loan level price adjustments right through here, you can see right here where all that comes into play. All right. So that's the first thing I want to discuss. So you necessarily don't have to, or you didn't have to pay that 0.5 point. You could have took probably a little bit higher rate and you would have gotten the same thing. So you have to equate out, is it cost effective to pay points now? How much are those points? What's your break-even point and all the other stuff? So that's what I wanted to discuss with you guys. And basically because of some of those conversations that I had today, plus all these lawsuits out there right now based on deception and fraud and a whole bunch of other allegations. Okay, so these are where the national averages are. You can also see there's a variance in national averages depending on where you pull your data. So for example, let's look here, 30-year fixed. This is breaking it down as a purchase and refinance, but when you go to my rates that I quote daily from Black Knight, and this is one of the country's largest surveyors, I'm at 318, but it only shows one rate. It doesn't break down. Here's it is as a purchase. Here's it as a refinance. That's why I always try to say, this is just, use this as a rule of thumb on basically trends. What's going on with rates? Your rate might be a little higher than this. It might be a little lower than this. Let's move further down the scope of this. 30-year jumbo. This one's saying it's 3.10. This one is saying it is 3.29 all the way up, if it's a refinance, to 3.46. Okay, so I hope you get it. FHA 299 for a purchase, refinance 314. Let's go over to this one. FHA is 323. That doesn't even equate out to any of these. So there's confusion all over the map when it comes to rates. Okay, so that's the biggest thing I want to stress today is you need to make sure you're working with somebody reputable, somebody that knows what they're doing, they're transparent, and they're giving you all the facts up front. They're not backloading you saying, okay, we're all the way down the stream, and now, you know what? Oh, man, we didn't lock your rate in. So now I know I promised you 2.75, but it's going to be 3.25 now. There's nothing really you can do about it because you need to close next week. You don't want to avoid that. And it happens every day because I get emails and calls every day, people frantic saying, you know, they just did this. They did a bait and switch. They did that. Guys, we'll be transparent from day one. Yes, some people are going to say, Dan, this is an infomercial, a commercial, whatever. I'm going to plead to you guys. If you're in the process right now, buying, building, or refinancing, please send us your loan estimate. Let us help you review it. Okay, it might be a loan estimate that out there is beating the world in their rates and terms. God bless you. Take it, run, move on. But you got to make sure if you're buying a house, will you close on time? Are they returning your phone calls? Are they giving you updates? Are they updating your realtor? Are they working with you or for you in this transaction? Or are you're just another number that, yeah, when you get to the closing, you get to the closing. Those are what I want you to avoid. Okay, so that's the biggest thing. So if you're looking to buy, build, refinance, if you're in forbearance and need some assistance, if you're in the mortgage process right now, and you might have locked with your lender, you might not have locked with your lender, they still had to legally issue you what's called a loan estimate. Send me those loan estimates, and all my information is down below. My email address, our phone number, and everything. I want to review those with you one-on-one to make sure you're not getting deceived like a lot of these companies are out there, and a lot of the fine print. You know, I hear all the time, oh, it's no fees. And then I get it back. Oh, well, that point is basically a penalty because of this. And oh, that was there because of that. And guys, it's a shell game. Okay. They're moving you around that shell game, explaining to you what is going on. Again, that person didn't defraud you. Yes, there's a 0.5 point penalty because it's a manufactured home, but could that have been built into the rate? When I quote you a rate, normally 9 times out of 10, there are no points, none. If you're looking to buy points or pay points, God bless you. And that's what I'm training my loan officers to start asking now, because I found a website this morning. They still had rates at 2.7, 2.8, 2.9, but every one of them, and I can't find it. I'll try to find that and I'll post it maybe tomorrow if I can find that. They were charging on average 1.5 to 1.9 in points to get that rate. So please read the fine print. So now let's get on to what rates look like today, and they are moving. And the funny thing is one of the captions we just saw said, you know, mortgage rates are holding steady. Well, they're really not. So let's go over where rates are today, and based on Black Knight. These are not my rates, guys. This is the national averages out there, similar to what I showed you just previously. But these give us just one numbers to take out all the confusion. So if the 30-year conforming, the jumbo, the FHA, and VA, here's where the rates are throughout the country right now. Again, you might be able to get a little bit better rate. God bless you. Probably not a lot lower, but you can probably bet that it might be a little bit higher than this. Because of all those loan level price adjustments we went over. So let's go to the 1-day delta, 7-day delta, and the 4-week delta. This is where you're going to start seeing changes. The 1-day delta is basically there's nothing there. It means a 1-day change. There's been really no changes. I don't know if all the lenders surveyed actually sent in their request promptly, but we had a bump yesterday, as you guys noted from my video from last night. But now here's where you're starting to see some movement. The 7-day delta, conforming rates, they're up 11 basis points. That's about 1/8 of an adjustment within the last week, okay? 0.125. Same thing down here with the VA. And it's almost across the board. You're starting to see 10 to 120 basis point move in these numbers right here. And then you see get to the 4 week, the 1 month. We're an eighth higher than where we were on the conforming. We're almost 0.2 to 25 basis points higher on the VA. So guys, the trend is moving up, as you can see here, and you can monitor it here. What is a basis point? Well, basically, if you look over here, a basis point let's go down to the bottom one, 4 basis points. Well, it's up 4 basis points. So if you move that over here, that means that yesterday, this rate was 2.82. Now it's up 4 basis points. So that's 0.04 to this rate. Now it's 2.86. Okay. And you're starting to see where these numbers are starting to move in double-digit figures. So yes, guys, mortgage rates are going up. What's happening to the mortgage-backed security market today? It's moving, and it's not moving in a good direction, guys. I said when this moves, it's going to move fast and swift and big. And I hope you're not having FOMO, the fear of missing out, because you missed out. All right. 22 basis points is a pretty big move. So what this number represents is what is happening to the price of a mortgage-backed security bond. That mortgage-backed security bond trades on Wall Street. It's the biggest component or factor in your mortgage rate. Okay, this is what everybody monitors. Not the 10-year Treasury, not the S&P 500. This is the biggest component of your mortgage rate right here. As this number goes down, it has an inverse relationship with the rate. So as the price goes down, your rate goes up. Okay, you can see this is a bad move right here. Let me scroll up so you can see this in the caption. That's a big move, guys, a big move. Okay, so it's still hard to believe that rates are only up less than an eighth within the last couple days. So I would highly suggest you call us or your mortgage lender you're working with to see where rates are if you're not yet locked in. Okay, the economic calendar today, there was a lot of stuff out. Mostly it had to do with house prices, and you can see they're coming in line. This one came in line with the consensus was looking at. This one, we're not going to look at that one right now. Federal Chairman Powell spoke, manufacturing index. Now the consumer's confidence, see where that came in at 109. That's not a good number. It's going down. So the consumer confidence is getting worse. But what's coming out tomorrow is the pending home sales. That won't really move the market. What's going to move the market is Federal Chairman Powell. He's got a lot of explaining to do right now. Everybody thinks he's behind the bubble when it comes to raising rates, the inflation index, and also the troubles that two or three of the Fed members are having. I won't even say legal problems. They're stepping down because of some investments that they've made that just doesn't look good. Okay, I'll put it that way, to save myself some legal problems. And then on Thursday, we're having some of the biggest news that comes out for the day is the continued jobless claims and initial jobless claims. Why? The Federal Reserve is majorly watching job growth. And they're saying, if job stagnates, maybe they won't move. But if the job market continues to improve, then yes, they are going to step in and start tapering. And it's already taking effect, as you can see right here. I knew as soon as they would announce it, everything is going to go catastrophic. Will we have a bounce back? Yeah, I mean, we should bounce back up a little bit. But the market right now is it's really hesitant. Why? Well, we got the federal debt ceiling that's a major concern. We have all this spending by the government with all this infrastructure stuff. They're still helping out companies and people and all this other. So they're still just divvying out a ton of money. And there's just a lot of concerns right now overseas, the supply chain and everything. There's a ton of uncertainty in the market. Let's see what happened intraday for those that are interested. We actually came out of the market, or came out for the day, and we were down, and then we had a decent rally up to this. Still didn't bring us to zero, but we got to one point where we were about zero, and then we kind of tapered off from there. And it continues to taper throughout the day. You can see from here, from 1 o'clock all the way through, it was down, and there's more red candlesticks than there are green. That means there's a lot of sellers in the market. The more they sell, the more the price is going to go down and increase yields. So that's not a good trend for us right now. Now, if you want to reach out to me and find out more about me and my team, or just reach out and say, Dan, what kind of rate can you give us? What can we do? Does this make sense? Can I lock in my purchase? How do I use you guys for pre-approvals? All that stuff. Please go to therateupdate.com. This is going to pop out. Please use the tools that we have here. It's a fantastic website that we've developed over the years. It helps you with buying houses, refinancing, and so forth. But go through here and learn some things. But what I'd like you to do is give us a call. 844-775-LOAN. It's 844-775-5626. Ask us any and all the questions that you have. We'd love to answer those for you. If you're watching this at night, in the evenings, and the weekends, and it's just you can't get a hold of us, schedule a meeting. That's why I added this to the website. You click there, it'll open up all the available days and times we have at our disposal for you. Click it, spell out the time you want, and let us know how you want reached. Do you want us to do Zoom? Do you want us to call you? How do you want us to correspond with you to answer any and all the questions that you have? So that's it for today, guys. It was nothing but rates today. Tomorrow we'll talk more housing, what Federal Reserve Chairman Powell said, and how that's affected the market tomorrow. Hopefully we start to rebound, because this has been crazy week. So God bless, guys. Thanks for watching. Please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. See you tomorrow. Bye-bye.